The Federal Reserve will begin unwinding its massive balance sheet in October. Here now to discuss is Brad McMillan, Chief Investment Officer at Commonwealth Financial Network, with us now from Boston. So Brad, the market moved lower on Wednesday after this announcement, but then a rally in bank stocks brought the indexes to fresh new highs. Do these movements sort of reveal any insights as to how to adjust your portfolio for the remainder of the year now that the Fed has spoken?
Well, I think the big takeaway from the Fed is they're going to do exactly what they've been saying all year. They made a point in talking about pulling down the balance sheet. They said they did it in one sentence. They didn't explain it. They said one sentence, we're going to do it. Go back and look at the notes from the earlier meeting. In other words, they underlined twice the fact that what they've been saying is exactly what they mean. And by looking at the projections for the interest rates, they're still looking at another rate increase this year. And I think that's interesting. They're saying we still think the economy is solid.
Yeah, I want to talk about the mechanics of the balance sheet in a moment, but weigh in on the market reaction that we saw yesterday. What does the fact that bank stocks rallied, even though the market initially dropped, the S&P 500, what does that reveal as to how people should be watching and investing in the markets for the remainder of the year?
Well, I think when you look at the financials, they're very often a leading indicator. Banks are lenders, businesses need loans. So if the banks are doing well, that says good things about the economy and the market. I think the initial drop is typically a knee-jerk response. I think the fact that the banks are starting to say, hey, this is okay, that means that we are going to see faster growth, and I think that's going to be good for the market. I think it's encouraging for the rest of the year.
Now, Fed Chair Janet Yellen also said in the press conference that investors shouldn't exactly view the balance sheet as a monetary policy tool, that just interest rate movements are the monetary policy tool. I mean, do you believe her, though? Because, it's hard to argue that this QE over the past, 8 or 9 years is not a tool to stimulate the economy.
Oh, it's certainly been a tool to stimulate the economy. And to the extent that Ms. Yellen, Chair Yellen, is starting to refocus investors on interest rates, again, I think they're trying to keep your eye off the ball, which is the balance sheet unwind. They don't want people talking about that. They don't want people worrying about it. They're hoping the effects will be minimal. That's exactly what you should be saying, but at the same time, as investors, we need to keep an eye on it.
So the takeaway, though, from the press conference was that this balance sheet process is sort of going to be on autopilot. But if we do get a major stock market correction, some sort of, bizarre event, tail risk, maybe something from North Korea, do you expect the Fed to sort of reverse their balance sheet decision in an effort to prop up a falling stock market or slowing economic growth if we get there?
I don't think they want to do that. I think this was really an emergency measure. They're delighted to be dialing it back. They now have some room with interest rates. And I think the takeaway is they're going to go back to using interest rates. They really want to normalize the balance sheet. So if we did get that kind of event that you're talking about, they would respond through interest rates because the balance sheet is now on a glide path to normality.
All right, and just quickly before we let you go, what do you make of where we are in the S&P 500, 2507 or wherever we are? Where do we go by the end of the year?
I think we've still got some more upside.
How much more?
Call it another 5%, maybe 10%. I wouldn't be shocked to see 26 or 2700.
By the end of the year?
I'm sorry?
By the end of the year?
It's possible. We're seeing investors really starting to feel better. We're starting to see some better news. And if we just saw some of the negative news go away, if North Korea were to settle, or if we stopped getting hurricanes, who knows what might happen.
All right, we'll watch how it plays out. Brad McMillan, thank you so much as always.
Thank you, Scott.